$1 million in your portfolio by 35 years old. Do you think that's possible? I'm talking about investment portfolio, not just your net worth. No matter which stage you're at in your financial journey, I'm sure there are lessons to be learned from my guest today, who's on track to achieving $1 million in his portfolio in 5 years' time. And that includes him having BTO with his partner and having reached his CPF full retirement sum. Meaning to say he's already reached CPF full retirement sum at 30 years old, done. He has a BTO, and he pulls out his Excel sheet, he looks at it and says, I think I can still hit $1 million in my portfolio by 35 years old. Let's find out how to achieve this goal. Hello, my name is Andrew and welcome to another Chill with TSC episode. In this series, we talk to interesting people with relevant experience and insights to help us learn from their perspectives so that we can create the life we love and manage our finances well. My guest today runs a finance YouTube channel which is growing very quickly, and he's churning out financial content regularly despite having a full-time job at the same time. He's achieved quite a lot for his age. Check out his YouTube channel, Chris at HoneyMoneySG. Let's welcome Chris. Okay, but what drives you towards that goal though? I mean, many of us dream of retirement or even early retirement, as you're saying, because 35 years old is considered early retirement. But some just dream about it. But you mentioned that you do 3 YouTube videos a week on top of your full-time job. And later on we can get into, how you get your first pot of gold, so to speak, right? And we work very hard, right? But what made you so motivated?
Okay, I think it's all part of my growing up stage, right? Because I'm actually a single child in my family, which means I don't have other siblings. And most of the time when I was growing up, I was actually alone at home. So my parents are all out working, trying to earn more money to actually maintain the family expenses. And I don't get to see them often until they are back at work. Sometimes they do work overtime. So I sort of grew up in this really alone stage. So that kind of grew on me being an introvert, right? Because I don't have people to speak to, don't have much friends to hang out with when I'm younger. So I feel that if I were to give my future kid a chance, right, I really do want to spend some family bonding time with him and not let him grow up in such an alone stage that he becomes a really quiet and introverted person. Not that an introverted person is bad, but I feel that there can be more development when a parent spends more time with the kid. So I try, for my future kid, if I could spend more time with him, and that comes in a means of early retirement and doing what I love, then I feel that this is a goal that I want to achieve.
Interesting. You feel like an introvert.
Yes.
Although technically you're a YouTuber, you're doing all the talking head videos. If I don't know you well enough, people might assume that you're more extroverted, right? But you feel like an introvert.
Yeah.
So like more introspective, and you're on your own at home thinking about all these things. Okay, so now that we know the why, let's get into the whole journey. All right. So let's talk about when did you start to have this goal? How much money do you have back then? And then where are you at now at 30 years old? Yeah. 30 or 31 this year?
31 this year.
Turning 31 this year, all right? And then how are you on track to 35 years old, getting $1 million US dollars in your portfolio?
When I started putting more focus, that will be the age of 21, because that's the age where I left national service. So for international folks who are not familiar with national service, you have to serve a 2-year mandatory military service with Singapore. And once you step out of that, then it's probably time for you to go to university. And before I went to university, I looked at some of my friends. They were actually doing like side hustles. So that is when I really started to try to earn more income at that stage, age 21. And because I kept to my low spending, low expenses, so you could sort of have this increased income and same level of expenses. That's when you actually start to really accelerate your financial goal. So that started at age 21. And moving on throughout my university life, so I continued with this, right? Just teaching more tuition, maintaining same level of expenses, and all that carry on until my first full-time job out of college. So out of college, I guess when you have that first job, having a full-time income, it kind of boosts your income even further, because you have a full-time pay, you plus your side hustle, plus your expenses are still at a relatively low level, then that would really accelerate your savings goal. So once you have that savings goal met, then that's when you start to look at investing. Okay.
What's your savings rate, by the way?
Okay, my savings rate at current age, I think it's around 60%.
60%. Well, technically, when you were younger, the savings rate might be lower because you're getting a lower income, right? So was it lower back then, or you've been maintaining 60%?
I think it was much lower at around 40 to 50%, because I wasn't earning much at that time, right? So most of the things really just maintain the level of spending. I think that's the first step that everybody who wants to step into personal finance should really look at. Minimizing or maintaining your expenses and not subscribing to lifestyle inflation.
Right. So right now it's about savings rate about 60%. So let's backtrack. 21 years old, you mainly derive your income from your tuition. That's the main thing.
Yes, that's the main thing.
And how much did you amass? What kind of fortune do you get out of that?
I would say a low 5 figures
Okay,
throughout
okay,
my
okay.
age 21 to my college graduation stage. That's around 3 years.
Okay, 24, 25, thereabouts, right? Okay, where are you at right now?
Where am I right?
Right now you're 31, turning 31 years old. How far away are you from your goal of 1 million in your portfolio?
Okay, so
what's in your portfolio?
I'm around 1/3 of the journey done.
Okay.
So it's actually quite aggressive, right? Because my last 10 years have been building that 33%. But I'm targeting my next 5 years to achieve that remaining 67%.
Yeah, that's pretty impressive. Let me summarize for you guys, right? Those of you listening, you have about 5 figures, and that is from your tuition, and that's right from 21 to 23, 24 years old. And then right now at 30 years old, turning 31, you have actually about 330,000 thereabouts in your portfolio. Okay, not just net worth, but your portfolio. Okay, so that's a huge jump. Okay, what kind of returns are you looking at? What kind of returns do you achieve?
Sure. So I actually targeted around 12% annual return.
Okay.
So that's the total return around the stocks and the crypto portfolio. Yeah, which I think is kind of safe number. I wouldn't say it's a really low number because when we look at index funds, we are averaging around 7 to 10%. But because I do have my own individual stocks as well as the cryptocurrency, so those would ideally yield around above 10 to 20%, I believe. Of course, that's all subjected to
It all
market
depends on the
conditions.
market. Yeah, that's right. Okay, so will you say that the huge part of it from the last few years at least comes from returns and investments?
Okay.
Because I don't know how much tuition you have to give to really hit your current portfolio level.
Yes. I think I mentioned in one of my videos that I actually quit tuition in 2016. So I have not been doing tuition for around 5 to 6 years now. So I totally cut off that tuition income, focus mainly on investing. I think in my initial stage of investing, I focus a lot on Singapore stocks, like a lot of people do because of familiarity. And those are yielding around 5 to 6%, including dividend returns, right? Because we all aspire those positive cash flow, passive income kind of thing 5 to 6 years ago. So I think when the pandemic hit, it hit really hard in 2020, that there's a rude shock to a lot of investors that companies can actually stop paying dividends or reduce dividends along with share price decreases. So that kind of awoken me a bit to shift to more US focused stocks, okay, like your big techs, your FANGs. So that kind of shifted my mindset as well, that we should not only focus on cash flow companies, we should also focus on growth companies. So that's kind of where the growth is going right now for my portfolio.
Okay, well, it seems like there's no secret, man. I need a hook for this episode. I know I'm just joking, but the whole idea is that what you just described is just high savings rate and then invest in the market, and that's how you got to about $330,000 in your portfolio right now.
Yes.
Okay, let me ask it this way: do you have a home run in the past couple of years? Like, what contributed the most? An investment that really paid off well? Crypto? What is it?
Okay, unlike other people who are going to tell you they hit a home run, I have absolutely zero home run. Okay. All it really did was just steady compounding returns. I don't really think I have any stock that had made like serious multi-baggers, like 10x stocks, right? I have none of that. Okay, maybe like 1 to 2x, that's normal. But zero like 5 to 6x, those kind of stocks, right? It's more of the compounding. A lot of people, they actually think that you can make it with just a few stocks and the 10x returns. But realistically speaking, a lot of people would not have that. Because when we're talking about investing mindset, some people would just sell at 2x returns, and some people would not hold for it. And a lot of people actually would fear when there's actually a sudden market dip, as we could see in the last 2 months, right, since 2022. So holding power is one of the most important thing for an investor in terms of mindset. So I think if you really do not know what to do, sometimes doing nothing is better than trying to go in and out of your portfolio trades.
So slow and steady got you to where you're at right now. And let's see if you can get you to your goal by 35 years old. So you're 1/3 of the way there. You're about 5 years away. And I mentioned that in your interview, you confidently said, yes, you're on track. Okay, what numbers are you looking at? What are the models that you use? What are the assumptions?
All right. So like I mentioned, the annual rate of return is around 12% on the investment portfolio, which means I will continue to pump some of my income and my savings to that portfolio periodically through dollar cost average, right? So whether it's in index funds, whether it is in individual stocks, I'll continue to do what has been working. And sometimes we do have mistakes as well, right? Because sometimes we pick the wrong stocks. Sometimes our conviction level waver because of market conditions. So that's when you also need to know in your investment thesis, what are the things that do not work? And maybe what are the lessons that you could learn from there? Then not make it again. Then reinforce those that work, right? I think that's a very important lesson. I think one of the important lessons that I've learned in my investing journey is that I think when I started out, I wanted to have a diversified portfolio, right? So we are talking about like 10 to 20 over stocks because it diversifies the risk. And I felt that when you diversify this risk, you are actually exposing yourself to read up more about this stock news, stock movements, and it's actually kind of mentally tiring. Rather than if you spend all your time just dedicating to 3 to 5 stocks, maybe, then just build your conviction around them. Then I think it's a much better way to actually go and look at where you're investing at. Because if you're holding too many stocks, then I feel that it's better to just go into index fund investing because there are people doing it for you already and you don't have to go and pick them yourself. So that's just some lessons that I've learned along the way.
Okay, so what's your style of investing?
Style of investing, right? So I mentioned in one of my interviews that I have a core and satellite portfolio. So those in my core portfolio is maybe like 5 to 6 stocks. Yeah. And those portfolios that I will buy and never sell because I have so much conviction in them. Right. So those are the things that you really read up a lot on the news, on their financial results and their CEO. So those things that you should always hold. And if it comes down at a discount, then maybe it's some time to add to your positions and all that. Then satellite is more of maybe some stocks that you think can make it 10x returns in the next few years or next 10 years. Those are more new companies, I would say, because they have not proven themselves yet. So maybe you want to give them a chance and maybe for them and their CEOs to see whether these stocks can perform over the long run. So that's a core and a satellite separation.
Okay, to share the percentage?
Yeah, so I think the core portfolio right now is around 60 to 70%. And then the satellite portfolio is around 30 to 40%, drop kind of significantly after 2022, right? We all know what happened. Yeah, so that's kind of the allocation right now.
Yeah, so that's the thing, right? We don't know about the market. You don't know what will happen, right? So you look at the Excel sheet, you pull down the Excel at 12%. Okay, you should hit your goal by 35 years old. But what contingencies do you have in place?
Yeah, so like I mentioned, right, in my $1 million USD goal, if I do not hit $1 million USD investing, at least I could say I hit 1 million SGD, right? So if I don't hit 1 million SGD investing portfolio, then there's a net worth 1 million. So these three, if I still cannot hit, then I think there must be some lessons that I really wish to learn. And okay, so let's take things into perspective, right? In the grand scheme of things, maybe you need to work like 1 or 2 more years to actually achieve that 1 million investing portfolio. In the grand scheme of things, 1 to 2 years is actually a very short time. Okay, so as long as you know what you're doing and you learn from your mistakes, then I think it's quite a commendable goal already if you still achieve it in the end. Yeah.
Okay. I mean, who knows? You might need a couple more years, which is still not too bad. And who knows? You might cut it short by 2 years if the market turns out well, right? Okay. So people in our community will be familiar with FIRE, financial independence, retire early, and well, for Chris' case, it's not so much of he wants to slack, and drink wine on the beach after you're hitting your goal, right, at 35 years old. So you'll be doing your version of barista FIRE, which barista FIRE will mean that you can retire, but you still have a job that sort of pays you, even though it might not be high income, right? But in your case, it's a YouTuber income.
Yeah.
Right. So that's your grand plan.
Correct.
Okay. Apart from that, anything else that you want to do after you hit your goal?
Yeah. So I think the barista FIRE, for those who are unfamiliar, maybe you want to take on a less strenuous job. And for me, my job is actually not less strenuous. In fact, you put in even more hours into YouTube than your day job. But because it's really fulfilling and it's fun and it's something that you do not mind doing for the long term, and it generates quite a good income as well if you do it good enough. So that is a YouTuber creator FIRE for me. So let's say if I quit my day job, I will actually go all in on YouTube.
So you mentioned that you currently you haven't invested in property and you won't count it as part of your portfolio, right?
Yes.
Not part of the $1 million goal. Okay. So would you, well, property is a huge outlay of your capital, right?
Yes.
If you put that in, will it, set you back?
Yes.
In terms of your goal? Is that why you didn't include it? Like, what's your plans for property?
Right. Okay, so I believe everyone who is into personal finance will have this really large Excel file forecasting by this year how much they should plan and have in their net worth, and how much budget should they set aside for their big expenses items like your wedding, your house, your renovation, and all that stuff, right? So all these have already been put in my Excel file. So I do have a budget set aside for it, especially for housing, because housing in Singapore is really expensive, right? We're talking about just a 2-bedroom apartment costing like 300k to 400k SGD if it's in the mature estate. So for myself, I really got myself me and my partner have got a BTO flat built to order. So government housing, much more affordable, right? Just waiting for it to complete. So funds have been set aside for that in terms of renovation, and we also could pay for our public housing using CPF funds, right? So that also has an allocation to that. So I'm not at all worried about whether this will actually hinder that plan. In fact, when I did the 1 million plan, I have already factored all this in before I could see the 1 million numbers by 35.
Okay, so and you have BTO already because you already factored in right from the start. It's actually not a hindrance to your goal at all.
No, in fact, it's part of the goal.
It's part of the goal, right? Yeah. So that's really a good way of planning. And talking about, well, let's not call it hindrance, obstacle to the goal, right? You also hit your full retirement sum in your CPF, right? That is not part of a $1 million portfolio, right? So that's an additional thing. Okay, tell us about it. You hit your full retirement sum. How?
Okay, so for those who don't really know what the full retirement sum is, we have this pension fund in Singapore whereby we need to contribute it via our employment income, and sometimes if we do it voluntarily, we could get some tax rebates, tax deduction, all that stuff. So I started contributing to my CPF at age 25. Now, why I started doing that at that time is purely a very simple reason, just to reduce some of my taxes, right? Because a lot of people are looking at how to reduce their taxes, but not many of them would think about it at age 25. And why did I do it is because I sort of planned out my road from 25 to 30. How much do I need for my CPF as well as my housing? At that time, no $1 million by 35 yet. So it's really just part of my future as well. How much do I want to have in my CPF? Because I think before all this 1M65 stuff came about, right? It's really about how to really increase your CPF savings so that you don't have to rely on government handouts when you are retired, right? So it's all about building your own retirement funds to a really solid state first. And I felt that if I could build my CPF funds first, I could have a financial safety net so that I could focus on more of my new ventures, right? Like investing, like doing YouTube and all that stuff. So hitting full retirement sum, I think I didn't expect myself to hit at 30 actually. Because in my initial plan at age 25, I plan to hit it at age 35 actually. So 5 years ahead of it. So I think sometime things happen and it accelerated along the way.
Oh, it can't be that accidental, right? I mean, you have to actively contribute into it. So you allocate a huge sum of your income towards it. Okay, and then plus, of course, the CPF interest itself.
Yes.
Right, but that's still, I mean, it's like a side quest
It
to
is.
your main quest, right? Okay, so you started putting to CPF before you had your $1 million
Yes.
portfolio goal. But even after you had the portfolio goal, like, don't you see it as deviating from that goal? Because there's liquidity issues when it comes to CPF, right?
Yes. Yeah, so on this point, a lot of people has feedback to me on my CPF videos. So you actually see two sides of the camp, right? People who really believe in CPF and people who don't believe in CPF and come on to your content and tell you how bad is it.
What do they say?
Yeah, so examples.
What's their criticism of this plan?
So people would criticize that if you put so much money into CPF, it's actually an opportunity cost because it only grows at 4% in your special account. While if you do like index funds investing, you get like 8 to 10% relatively safe as well. So that is the criticism behind it, right? Because I don't disagree with that. That is actually correct, mathematically correct. But let's take a look at some of these people who may not be so savvy at investing. Now, if you invested at the start of year 2022, you will see your index funds plummet, right, 10 to 20%. If you don't even have a CPF to actually back up your financial security or your financial safety net, right, then you will not touch investing ever again, because it is so scary for you to see like 10 to 20% drop over a period of 1 to 2 months. So I think it's more about building that investor mindset that I talk about. Now, I recognize that there are people who really made it big in stocks investing and index funds investing, and these people could actually generate more than 10% a year on top of not contributing to CPF, right? So they could use even more cash to generate even more returns. Now, I recognize this group of people, they are really remarkable, and I applaud them for doing what they have done well. But I think we must recognize that in the stock market investing, not everybody will make money. And I want to help these people who just want to have less risk exposed to stock market, and maybe show them that CPF, even with CPF contributions and top up and all that stuff, you could also achieve the same level of goal. Okay, so that's where I'm coming from. I'm doing it first, then I'm telling it. It's not like I'm telling and showing it, then I go and do it. So I think that's more important, showing by example.
Okay. What's the full retirement sum right now?
It's about 192,000 Singapore dollars.
Okay, so 192 in his CPF, 300k in his portfolio. Ladies is taken. Talking about your partner, right?
Yeah.
Like, is she aligned with your goals? Because you mentioned 35 years old and travel around the world. Like, well, she has to travel with you, right? I
Yes.
assume. So, like, is she aligned with that goal?
Yeah. She's actually quite a frugal person, right? I mean, when we're looking for a partner, we really want to find those who have similar or aligned mindset with you. No point you are the one earning really good income, having really high saving rates and good investments, and then your partner is the one splurging all your money, right? Because when you manage finances as a family, it needs to be as a team. It's a team effort. No point one guy really save here and the other person really spend so much money. It's just a net zero outcome. So I felt that I saw this value with my partner. She's really a frugal person, and that's why I chose her, right? Because I've been with her for around six to 7 years. So you can really see that having a really frugal partner or aligned mindset partner is more important than whatever you do with the stock market, whatever income you earn, right? Because we really want to find someone with aligned mindset, so that when you decided to get married in future, not only you don't quarrel about money, but you also have a happier relationship, so to speak.
Finance tip number 1, find the right partner.
Yeah.
Okay, let me expand it a bit more. I mean, apart from your partner, how does your family react to this goal when you first told them about it?
Oh, I didn't tell them about
okay.
it, actually. So my family don't even know I'm doing YouTube right now.
Okay.
Yeah.
Okay.
So regarding this, right, I wanted to, because my family is a Chinese speaking family, so most likely the YouTube algorithm doesn't recommend my videos to them. But I felt that if one day my family can actually see my videos on their YouTube feed,
You've made it.
yeah. It means that the YouTube algorithm has blessed me to the
It's a trending video or something, right?
Yeah,
It has to be.
kind of.
Right. Okay. So, like, how do you? Because, well, Asian family, if you tell them, you want to retire at 35, or you must be lazy, do you face that? Like, how do you overcome that?
Okay.
Yeah.
So this is a really interesting perspective, right? So I always subscribe to the mindset that when you want to achieve something, you don't need to go around and tell people that you want to achieve it. In fact, I never told people of my 1 million by 35 goal until recently in 2021 when I started doing YouTube. So all these past few years, I've never told anyone about it. I just sort of slowly build up my strategy and my funds and all that stuff. So when you're starting to do anything, a lot of people would doubt you, because I think a lot of people in this world, if they could not achieve it themselves, they would doubt that anyone could achieve it, because humans always have this selfish mindset, right? If I cannot do it, anyone could not do it. And if they could do it, they must have some sort of privilege. So before you start on any goal or any journey about about reaching really high targets, right? I think most importantly, before you tell anyone, just do it silently first. If it works out, that's good for you. If it doesn't work out, at least nobody really knows about it, right? So you don't have to be really shy about it. So that was my journey, and I know people may not subscribe to the same journey, definitely, but that was how I did it.
Thank you for watching this video. If you found it useful, like, share, subscribe, and feel free to leave your comments. You can also join our Telegram group, follow us on social media, and sign up for our weekly newsletter. Everything is in the description. For more content, check out thefinancialcoconut.com. What is one of your core life principles?
Right, so one of my core life principle is actually to actually protect your downside first before you actually look at the upside. Now, downside, we're talking more about a defense mechanism. So we're talking about downsides. It could be things that may set you back, right? So before you start investing, I always advocate that you go and sort out 4 things first. That means minimizing your expenses, paying off high interest debts, and also buying a sufficient insurance, and also having a 6 months emergency funds. So that's kind of a defensive strategy to protect your downside. Because if you actually go and aim for the upside first, right, it will actually, when crisis comes, it will actually set you really back, and you don't have this kind of defense mechanisms to actually protect yourself. And you will feel so devastated, like I mentioned, that you won't even go and touch investing again because it's so scary for you. So it's always about protecting the downside first, and the upside will take care of itself. Same like stocks investing, right? Once you go and secure those core positions, then you go and look at your satellite positions, because satellite kind of have more high risk, and that is actually the reason that I always advocate. Protect your downside first, then the upside will take care of itself.
You're a finance YouTuber. What is one piece of financial advice that comes to your mind that you think should be shared more often?
Right, so I strongly advocate everyone, do not compare yourself to others. Okay, this may not be financial advice, but it's kind of applicable to everything in life. Now, you see a lot of people living in social media, having really flashy cars, flashy properties, high stocks and crypto portfolio gains, right? But a lot of people who would never talk about their setbacks and failures and those things that may set them back in life. And I think it's more important that you yourself improve over time as an individual. Look at where you were a few years back. Would you even have imagined that you yourself has reached this stage currently? Because if you look back and told your older self that you have achieved this, maybe your older self will be so applauded by what you have achieved. So do not compare yourself with others. Just have your own KPIs, and if you have met it, then just pat on the back for you. I think that's a good encouragement for everyone as well.
What is one area of your life that you're giving additional focus right now?
Yeah, so one of it is actually looking more into my family finances, because in a traditional Chinese Asian family, right, we don't really like to talk about money among our families. But I think it's really important as a content creator, while we spread financial knowledge and all that stuff to a wider audience on the internet. Sometimes the people who need the most attention and most help are actually those family and friends around you. But of course, like my mom, right? I actually didn't know that she didn't had an insurance integrated shield plan or hospitalization medical plan insurance. So I just signed up for her last year recently. So for all content creators out there, maybe just take a look at who really needs help around you. And sometimes they may be really too shy or too afraid to actually speak up to you to tell them about their circumstances. But that's okay, right? Because I think as long as you really care for them and take responsibility for what they are doing, then I think all good, right?
Right. I mean, personal finance is not just about your own finance, right? It's about those in your orbit, meaning your family and those close to you. All right. Thank you.
Thank you, Andrew.